Please take your seats. Axios' Opening Doors, Expanding Pathways to Home Ownership is about to begin.
Welcome aboard.
Please give it up for Axios congressional reporter, Steph Kite.
Good morning. I'm Steph Kite. I'm a congressional reporter at Axios, and I'm one of the co-authors of our Hill Leaders newsletter. Sign up if you want daily news about Congress. There's a lot going on these days. But thank you to all of you for being here with us today. We're going to be chatting with a few guests about the future of home ownership and housing policy in America. If you are following along on the live stream, we ask that you use our hashtag #AxiosLive. If something stands out to you, tweet away, post on X, post elsewhere, and include the hashtag. I'm really excited to kick things off with our first conversation. I'm joined by a senator who is only in his first term, but has already been out in front on a lot of these issues. So please help me welcome Ohio Senator Bernie Moreno.
Steph.
Hello. Thanks for being with us, Senator.
Of course.
Before we dive into homeownership, housing policy, I did want to get your reaction to Axios had a story yesterday that Democratic leader Chuck Schumer met with Sherrod Brown over the weekend, trying to convince him to jump in. That's, of course, who you beat to get into this seat. What do you make of the rumors of Brown considering another run?
You know, it's hard when you've never worked in a private sector to get a job, so maybe he's having some difficulties there. I'm hoping that Axios could use a reporter in Ohio. You know, Sherrod's available.
We do have some Ohio reporters, in fact, so.
No, I look, John Hughes is going to win. He's done a great job here. He's extraordinarily well known throughout Ohio. He's got support from unions. He's got support from the business community. He's done a great job with economic development. He's somebody who is thoroughly popular throughout Ohio. So I can't imagine that Sherrod would run against John, when in my case, when I decided to run, the polling had me at 1% 3 years ago, like 1%. And to make it worse, by the way, the margin of error was 4%. So there's a chance that negative 3% of the people are going to vote for me. So I think John's in good shape. I think Sherrod just likes the attention.
Okay. Well, moving into affordable housing, that's not always a bipartisan topic, but just last week you introduced legislation with Senator Lisa Blunt Rochester. Can you give us the Axios smart brevity on what that legislation would do?
Yeah, basically, if you think about when home builders go to communities to get permits for housing, they have to go through a very extensive process, rightfully so, by the way. You want to make certain that those local communities understand what's being built in those communities. So what we've developed is pattern books. So these are pre-approved building plans that communities would have. We have a fund set up so that communities can get those done. So when a builder comes in and they say, hey, we're going to build a home or a set of homes from the pattern books, the approval process goes from, call it 9 to 12 months to basically 2 to 3 weeks. So they can start quickly. So for home builders, when they have to hold on to these properties, the lots for a long period of time and spend a lot of money on fees, it just raises their costs, which in turn raises the cost of the home itself.
Gotcha. A lot of legislation is introduced. Do you have any sense of whether this has movement in committee, where you think this might go?
Yeah, I mean, look, there's obviously a lot of things that happen in DC that's hyper partisan, but one thing that shouldn't be, and right now, knock on wood, is not partisan, is this idea of homeownership. Because if you think about the essence of the American dream, in my mind, the way I define it is somebody can go to high school, you can graduate, you can get a good job, you can get married, buy a home, you can raise kids, you can own a car, you can retire with dignity, and only a mom or a dad can work and the other parent stays home with their kids, but that home ownership is an essential piece of it. And unfortunately for a lot of young people, I call it people in their 20s and even mid-30s, home ownership seems extraordinarily elusive, and that can't be the case. So we want to make certain that we make home ownership more affordable, and I'm excited that Chairman Tim Scott of our Banking Committee is going to put together a very comprehensive bill that addresses all that.
Okay, so there is comprehensive work being done to kind of address this issue.
Yeah, absolutely. I mean, obviously, another big one is the Federal Reserve not being obstinate and lowering interest rates to just put us in line with other developed nations, which will also make a big difference in, of course, interest rates drive a lot of the cost of homeownership.
Right. We're going to get back to the Fed. I know you have a lot of thoughts on that. But first, I wanted to mention in your statement about the bill you introduced with Lisa Blunt Rochester last week, you included the importance of rent reporting. Can you talk a little bit about that issue for you and whether you see that as another issue that there could be federal legislation around? Yeah,
as you know, it's the vicious circle. And I knew that from owning car dealerships, that people come in to buy a car, buy a home in this case, and they say, well, we can't give you a loan because you don't have a credit history. And well, then that's a vicious cycle. What comes first, chicken or the egg? Well, if I can't get a loan because I don't have a credit history, how can I get a credit history if you won't give me a loan? But a lot of people are paying rent. And now that is currently factored in some of the advanced FICO products that they have. The idea is how do we make it easier to allow APIs, for example, to go from checking accounts right directly into FICO or other credit reporting agencies, so that if I'm paying my rent on time, and I've been doing that for 2 or 3 or 4 years, well, that should be my best indicator that I'm going to be a good payer of my mortgage payment. So I think if we can make it easier for the credit score companies to get that data, because as you know, most landlords are small businesses. They don't have hyper sophisticated connections into computer systems. So we can make it easier for these companies to see that, then rental payments, it should be a big leading indicator of whether you're going to make your payments on time. And that will open up the aperture for people to get more loans, because that's another big piece of it as well.
Right, and there's been a lot of state movement on that issue, state level incentives, but you think this is something the federal government and Congress could do some work on?
Yeah, because you're talking about, when I was in the car business, I also then started a tech company. What you need to do is you need to make the interconnections for the technology to work well. And the easiest and most predictable way to do it is to have an API from your bank right to the credit reporting agency because it's easy, right? You're making the same payment every single month. The bank can see that pattern of payments and can report that information right to the credit reporting company. I think the credit reporting companies are happy to have more data because more data helps their model be more predictive.
Gotcha. Okay, so going back to the Fed, you've been very clear that you're disappointed in the actions of Fed Chair Jerome Powell. First, I just wanted to ask, to be clear, do you believe in the independence of the Fed?
Absolutely.
Okay.
Absolutely. I was born in South America and moved here when I was a kid. In third world countries, that's a big issue, is that there is no separation. Our monetary system has been a staple of this country for a long time. In fact, it was created by Alexander Hamilton, and even Jefferson, who hated it, tried to get rid of it, but realized, well, there's no really good alternative. So having an independent Fed is really, really important. But you also need to have somebody competent running the Fed. And Jerome Powell has just proven to be extraordinarily incompetent. There was a decision back in the 30s, the Humphreys decision, which said that that person can be fired for what they called basically ineptitude. And if that doesn't apply to Jerome Powell, I don't know who it would apply to him. That he's losing hundreds of billions of dollars a year. That's never happened in the history of the Fed. He was way too late on raising interest rates. Not necessarily he needed to comment on it, but said, hey, look, if you're going to do massive fiscal stimulus and a supply shock when the supply and demand curves are now in opposite directions, we're going to raise interest rates to kind of cool that off. Didn't do that. We got generationally high inflation, which has led to a lot of the housing inflation we're talking about today. And then it's been too late to lower rates. And if you look at our rates, they're dramatically higher than other developed nations, even though we have lower inflation. Not to mention, of course, the Eccles 1951 and the third building that they have that's cost $3.1 billion in renovations. I mean, this is a town where $3.1 billion is probably the top 10 real estate deals in the entire district. And to spend that on a renovation project, and it shows total mismanagement.
So do you think President Trump would be in his right to fire Jerome Powell?
Absolutely. Because again, you can look at that Humphreys decision and you look at what the Supreme Court looked at. If it doesn't apply to him, then it applies to no agency. So there's clearly incompetence there. And quite honestly, I think the better decision for Jerome Powell is just to resign. Because why put the country through this? I mean, if everybody at Axios wanted you to quit, and including your bosses and everybody who read your articles, what did you just say? No, I'm going to stay. And the guy should just leave and do right by the institution. There's a lot of insanely qualified people that would run the Fed. And by the way, it's costing this country a lot of money. Just a 1 point drop in interest rates costs us over $350 billion with a B dollars per year. That's plus what it costs homeowners and people who have credit cards and car loans and business loans. This is one person with enormous power.
Well, don't you think the idea of the independence of the Fed means that despite what politicians are saying, that he has a job to do? And do you think that people like you, elected politicians, the president himself, speaking out, criticizing, are you worried at all that undermines the idea of the independence of the
No,
Fed?
not at all, because what I'm saying is the guy's not competent in his job. So independence doesn't mean incompetence. In other words, having an independent Fed doesn't mean you're allowed to have a leader that's incompetent. That obviously doesn't make any sense. You can't be that bad at your job and keep your job in any other place on earth. If you were that bad at your job, you would be fired. If anybody here was that bad at their job, you'd be fired. You can't lose hundreds of billions of dollars and then mismanage a renovation project, which, by the way, probably should never have even been done. The original budget for 4 buildings was $2.1 billion. Including the New York Avenue building. So you take that out, it's 1.7. Now the 1.7, when you add the building that was completed and the 2 that aren't, 3.1 billion. The cost overrun is more than what it costs to build all of City Center. I mean, you can't have somebody who's done so poorly at a job stay in a job. That's what makes people frustrated. That's what voters hate. It's like, hey, I'd lose my job if I did that. Why does this guy get to keep his?
Why do you feel like there aren't more lawmakers who are talking about this issue the way you are?
I think there's certainly a few that are. Certainly I see those conversations happen privately. But look, ultimately the best avenue, Steph, is for him just to do the right thing. He's up in May anyway. I mean, what are we talking about? A handful of months or a little bit more than that? Just resign early. It's no big deal, right? You'll go be a CNN commentator or an MSNBC commentator. You'll be fine. There's lots of market for anti-Trump people on TV. Go do that and let the country have somebody who's going to run the Fed properly.
Well, as a senator, you would have a role in helping decide who would ultimately be his replacement, whether that's before May or in May when his term is up. How important will it be to you to hear that any nominee is dedicated to lowering rates?
Well, what I want to know is what is the metrics he's going to use. So I'll give you an example. In our banking committee hearing a couple weeks ago, 3 weeks ago, when Powell denied that the building had these features, which it clearly does. So did he lie under oath is a question. But he also said that forgiving student debt was a good policy. This is a central banker. Like, the one thing a banker should never say is that forgiving a loan is a good idea. That's extremely crazy commentary. He should stay in his lane. Now, I think the Fed should modify its objectives. As you know, their objective is to control inflation and maximize employment. I disagree with that. I think it should be to control inflation and maximize good employment. I think they should look at it and say, and I actually asked Powell about this. So if every American made minimum wage, would that accomplish your objective? He actually said yes. That's insane. Like, we don't want Americans not having a family sustaining wage. So the objective should be maximum employment at the maximum possible wage so that people are doing well. They can afford a car. They can afford a house. They can afford to go on vacation every once in a while. They don't have to have 2 or 3 jobs. One parent can work. They can retire with dignity. If we don't rally around that as the real concept of the American dream, we're doing this country a major misservice. What makes this country strong, what's made this country strong, is we have a strong and thriving middle class. That's what we should all be focused on, whether it's the Fed or Congress. All of our decisions should be made around that as the central premise.
Given these kind of big picture concerns you have, do you think the Federal Reserve Act needs to be changed or updated in any way?
Well, look, there's a lot of things that we should talk about. For example, should the Federal Reserve be paying interest rates to bank for their overnight deposits? I think that's a legitimate question that we need to examine a little bit more. So in case you're not sure what I mean by that, banks leave their deposits with the Fed. The Fed pays them interest rates. That's part of where the losses are coming from. Is that really the role? But we're paying interest to probably 40, 50% of those banks are foreign banks. So foreign banks will deposit money in our accounts in the U.S., and the Fed pays them. We're paying foreign banks to house money in America. I don't know that that's a good plan. Maybe it needs to be lowered. There needs to be at least looked at that concept. We need to take a look at that. We need to take a look at the mission of the Fed. Again, maximum employment at the highest possible wage is what we should modify. And then we need to make certain that we understand what they're looking at when it comes to inflation. I'll give you an example. Just common sense would tell you, like, you don't have to be a PhD here. If you have a supply shock where supply is going to go dramatically down like we did during COVID when politicians, by the way, not the virus, politicians shut down the economy, and you had massive fiscal stimulus, you're going to drive up demand, you don't have to be a genius to know that prices are going to go up. Supply goes down, demand goes up, prices are going up. Again, that's not a thesis for your PhD. He didn't make those decisions then. Then you look over here and he says, well, I'm not going to lower interest rates. You say, well, why not? Well, because tariffs might lead to higher inflation. Even though inflation is at a 4-year low, it might lead. That's not the proper analysis. One is 100% factually accurate. The other one's not. And there's no difference between tax policy and tariff policy, except that tariff policy can be moved and be temporary. And typically, like we're seeing right now, tariffs are typically absorbed by importers of those home countries. That's why you're not seeing inflation. For example, car prices are actually down from the beginning of the year, even though everybody at the beginning of the year was saying, cars are going to go skyrocket in price. So tariffs is much more difficult, but he didn't comment on tax policy. And what we did with the One Big Beautiful Bill is we kept tax rates low, we incentivized companies to invest, and doesn't factor that in. So it's how would you analyze this? And I think he's looking at it from a very political lens. He should be looking at it from a very apolitical lens.
Well, that is all the time we have. Really quickly, though, you're a coffee guy. Have you found any DC coffee shops that meet your standards?
Dunkin' Donuts. We have a monogamous relationship with Dunkin' Donuts. It's right across the street. They do a great job.
What's your order?
It's half coffee and half steamed milk. In Colombia, they call it café con leche. So for anybody who's out there who's Colombia, they're like, I know what that is. The rest of you is like, ooh, gross. But that's what I drink, with 3 sugars, which explains the jitteriness.
Well, thank you, Senator, for your time. We have to leave it there. Appreciate all of you joining us today. And we have more great guests to come.
Thank you, Steph. Okay.
Introducing our View from the Top moderator and Axios' Chief Operating Officer, Allison Murphy.
Good morning. I'm Allison Murphy, Axios' Chief Operating Officer. We're thrilled to have today's conversation on expanding pathways to home ownership. And here at Axios Live, we can't do that without the support of partners like FICO, who are bringing today's conversation to life. So without further ado, we are about to host a View from the Top conversation with the Vice President and General Manager of B2B Scores at FICO, Julie May. Welcome, Julie. So Julie, let's start at the very beginning.
Right.
When we think about FICO scores, talk about how the FICO score is used in the mortgage industry and by the industry, and what role does it play in facilitating homeownership?
Yeah, so that's a great question, and it's a good place to start, right? Because I think there is, a lot of people know things about the FICO score, right? You know that it's the score that's used in 90% of lending decisions, not just in mortgages, but across all different types of lending products in the United States. And people know that when you go to a bank or a lender, they pull your FICO score, right, to determine if you qualify for that loan and at what fees and what terms will you qualify for that loan. That's at the origination process. So I think that's very well understood in terms of the role that the FICO score and credit scores play in the ecosystem at the point of origination. Where I think it's a little less understood what the role of the FICO score is across all of the different ecosystem players and stakeholders. And so, after that score is pulled at origination, it is then shared throughout the entire ecosystem to be used for all different types of things. And the goal of those things are to ensure safety and soundness in a $12 trillion mortgage market. So I'll give you a couple of examples. Rating agencies use the FICO score as an input in rating. Credit and capital requirement models utilize the FICO score as an input. Mortgage insurers use the FICO score to help set insurance rates and understand the risk associated with what they're insuring. Investors use it associated with the securitization process associated with mortgages. So that one FICO score, which is pulled at origination, is then used so many times, right? As I'm out engaging with different people in the ecosystem, some of those scores pulled at originations are still being looked at 7, 8, 9 years later, associated with the health of a book of portfolios associated with mortgages and in the investors that have purchased those mortgages. And so that's the part that I think is a little less understood about the criticality of the FICO score in the mortgage ecosystem. And why that's important is we take our position in this kind of ecosystem very seriously. Because when you're using something to make so many different decisions, it's important that you can trust it.
Absolutely.
And so when people ask me what the FICO score means, I say the FICO score means trust. Because when you pull it at originations, it's going to give you an accurate assessment of risk. And then when every other ecosystem player uses that FICO score, they're able to trust it, not just at the point of origination, but 7, 8, 9 years later.
So it's underpinning really an entire system and industry. And we talk about the FICO score, and that's something probably many have heard of, but I think not everyone understands the models and the multiple types of scores that go into this. So can you talk a little bit about dimensions of some of the newer models and scores? And in particular, I know with 10T, you have a brand new model that's come out.
Right, so that's also a great question. When I started leading the FICO score business a couple of years ago, I came from leading our fraud solutions division at FICO, and there we had hundreds and hundreds of models. And I thought the FICO score was a score. It's not. There's a whole bunch of FICO scores, right? I was not educated about this myself, working at FICO for over 20 years. So we have lots of different versions of the FICO score. We have industry versions for bank card and auto, and then we have different versions that are used across the different lending community. Our latest and greatest score is FICO 10T. That's been approved through the Credit Scoring Initiative by the GSEs. The T in FICO 10T stands for trended data. And so what that means and why that's different is it basically allows us to look at things over time associated with the credit reporting agency data. And what that enables us to do is see, are borrowers consolidating their debt? Are they paying certain things down over time? And that just gives us a little better picture. And what that little better picture means is that we can actually improve the results for potential homeowners and borrowers, as well as for the lenders who are offering them terms and conditions. And particularly in 10T, what that means for the mortgage industry is that common operating points, right? So associated with the GSEs, it's about 680. You could actually drive improved originations. So you could originate 5% more home loans. These are big numbers. 5% more potential borrowers could get into homes, and you would not increase your risk of default.
That's
as a lender.
remarkable.
It is remarkable. We're pretty excited about the results of that study. We recently released a white paper, which we made available to the industry, to say that FICO 10T changes the game for home ownership, and it should be used, right? It is by far and above the best performing credit risk score in the marketplace, 5 times better than the competition. And what that means, right? It's not about being better, it's about getting more Americans into homes. And that's why it's important that it's better.
5%, as you said, it's meaningful numbers.
Right.
So you just spoke about trending data as part of 10T. Talk a little bit about, there's growing interest in other sorts of alternative data that can go into credit scoring. So how does FICO view other alternative data? What new data sources do you see that could be promising for expanding even more access to homeownership?
I love to talk about data, so I'm glad you asked this question as well, right? My analytic science team says I like to play a scientist on TV, yes. Right? Or on the stage, right?
Mine says the same.
Let's talk about the data. We've also pioneered data, so rental data, right? The senator just spoke about rental data. We agree. Rental data could be critical to improving home ownership. It's why over a decade ago, we started including rental data in the calculation of the FICO score. FICO score 10T will utilize rental data when it's available. FICO 9 utilized rental data. Again, over a decade ago, we introduced the use of rental data into the FICO score because we believe that it's important. Unfortunately, as the senator spoke about, we have to do things to increase the volume of rental data to really make that a game changer. Of the 80 million renters in the US, about 2.3 million of them today are having their data provided to the credit bureaus. So it's important, and we believe it could be critical, but we have to fix some of those barriers in terms of getting access to that data for it to really be a game changer. But the FICO score is ready when we actually are able to address those barriers. But other data, right? Telecom and utility data, we include that as well. Cash flow data is something that's frequently discussed. FICO was a pioneer associated with cash flow data as well. We have a product called Ultra FICO, which looks at cash flow data. And what we've seen with users of the Ultra FICO score, this is really focused on people who maybe are not meeting that credit qualification score level. And if we can look at their cash flow data, so data in their demand deposit accounts, their checking, and their savings accounts, then we can supplement traditional credit bureau data with that data to actually provide a better, more holistic view of the borrower, and that can improve their scores. And we see over 70% of people who have significant views of positive cash flow data having increased credit scores with the use of Ultra FICO. So that's really important for those thin file credit invisibles.
Absolutely.
We also have a product called FICO XD. Again, we're going back to the FICO score is just not one score.
Multiple.
The XD score looks at non-traditional telecom and utility and asset data. And so there are some credit invisible populations. 25 million credit invisibles could be addressed with the XD product, and 28 million potential borrowers that have thin files could be addressed with our XD product. The final thing I'll talk about on data, I told you I was a data nerd, I warned you, is BNPL data. So the senator also spoke about, getting access to credit and it being the cycle and how can we improve access to credit. I'm very passionate about this. FICO's passionate about this. It's why we just announced the availability of our models that are coming soon for BNPL. So buy now, pay later is oftentimes a product that gives people their first access to credit. And we think it's important that if people are using buy now, pay later loans responsibly, that can be included in their credit score. And so we announced about a month ago that we're going to include buy now, pay later in 2 new models, FICO Score 10 BNPL and FICO Score 10T BNPL. The thing we've learned, though, after decades in the credit scoring space is it's not enough to build it. You also have to enable the lenders to use it.
Absolutely.
And so what we've done with that product is anyone who has the core FICO 10 or FICO 10T score can actually get the BNPL score for free so that lenders will get comfortable using it so that the consumers can see the benefit of that. We've also have another program where we made our FICO XD and Ultra FICO score available to CFDIs and MDIs for free. So, because we want lenders to use these products so that we can help the American borrower. And the only way to do that is to provide incentives so that they can see the benefit. They can test it.
So all of this is creating more chances for people's full financial viability to be seen, as well as to make sure everyone in this ecosystem has access to, as you said, secure, trusted assessments of that.
That's right.
Well, I know we are actually just up on time. We could talk data for hours and hours, but this has been fantastic in explaining the ways in which the score and the innovations FICO is driving can support an entire ecosystem of trust that helps more people get into homes. So thank you, Julie, for your time today and for bringing FICO and you for bringing this conversation to life this morning.
Thank you so much. Glad to be here.
Thank you.
Please welcome to the stage Axios Chief Economic Correspondent, Neil Irwin.
Good morning, everyone. Thanks so much for being here. Quick plug, if you don't already, please subscribe to our Axios macro newsletter that I write every weekday with Courtney Brown, who you'll see in a minute. It's daily insights on how the economy, policy, and financial markets collide. For our next conversation, we have an exciting one. We have a leading expert on housing and homeownership. He leads the research into those areas at the Bipartisan Policy Center. Please welcome Dennis Shea. How are you? So I'm going to start very big picture, and then we'll zoom in, and then we'll zoom back out, if that makes any sense. What are the biggest obstacles to affordability in the U.S. housing market today?
Well, first of all, I want to thank Axios and FICO for having me here this morning. The biggest obstacles today for home ownership are, I would say, elevated interest rates, home sale prices, which have soared 31% since 2019. So the average median home sales price is $411,000 today, as opposed to $313,000 since 2019. But one thing I think we really need to drill down is the lack of inventory, the lack of supply. So we just have underbuilt housing. We can get into the reasons why, but we have underbuilt housing by millions of homes since the Great Recession.
Right, so we can't go back in time and build in the 2010s the houses that we wish had been built. All we can do is think about the future. And what do you see as things that can happen at the policy level to try and change that supply outlook for housing?
Okay, well, first of all, you have to see home ownership as a continuum. It's rental and home ownership. Housing is a continuum. So Congress recently expanded the low-income housing tax credit, which is our most important affordable rental housing production program in the United States. And they did that, strong bipartisan support. They did that in the reconciliation bill. So that would add about 1 million homes, 1.2 million homes rental homes over the next 10 years. So that helps. Congress should also pass, which was not in reconciliation, something called the Neighborhood Homes Investment Act, which is similar to the low-income housing tax credit, which provides a credit to developers to build and rehab homes for owner occupancy in distressed communities. And the homes have to be affordable to lower and moderate income families. And that would create about 500,000 new homes over the next 10 years. That would be for owner occupancy, for home ownership. So that would be an important thing, and we're hopeful that Congress will do that later this year if they take up a second reconciliation package, but that's wishful thinking maybe. But there are other things. I mean, today, before the Senate Banking Committee, there is a bipartisan bill called the Road to Housing Act, and that has joined Tim Scott, a Republican, the chairman, with Elizabeth Warren. They're working together. So I'm of the view that housing is having its moment right now in Congress. People are hearing in Congress that housing affordability challenges are just unacceptable and you need to do something. But there are provisions in that bill that would help increase supply of homes for sale or owner-occupied homes. We heard Senator Moreno this morning, his bill, which would allow communities to pre-approve design and reduce the time for building and construction. That's part of that package. One thing we ought to do is fix manufactured housing, the regulations around manufactured housing, which has become an incredibly important source of affordable housing in the United States. Under current law, HUD requires that manufactured homes have to have a permanent chassis, which is used to transport them to their ultimate destination. But today, many manufactured homes are built on a permanent foundation when they arrive at their destination and never move at all. So that requirement of having a permanent chassis, it still applies, adds additional costs and actually prevents, in some cases, the production of manufactured housing. So there's a provision in the Road to Housing Act that would eliminate that requirement. But there's lots of things we can do around. I can talk, Neil, but about what we can do.
So how much of this, we've been talking about federal policy issues, how much of this, though, is ultimately at the state and local level, zoning reform, doing things to have more projects that get through the kind of approval process to get built?
That is absolutely correct. I mean, we see the need to increase housing supplies not just being a federal responsibility, it's a local responsibility, it's a state level responsibility, and a big barrier to affordable supply production have been local zoning and land use regulations, which limit density, which requires, single family homes on large plots, minimum parking requirements, other kinds of things that impact fees, that restrict the types of housing that can be built, and also raise the cost of housing. So that is a major factor, and communities across the country are making changes. And one of the interesting things we've been seeing is that state level governors are now getting in the act. People like Greg Gianforte, Republican governor of Montana, has taken a very proactive view towards enacting regulatory policy, advancing regulatory policies that allow more housing to be developed. Also, Tina Kotick, Democrat from Oregon. So there's greater awareness at the state level. We're seeing governors really get into the action right now.
So yeah, you're at the Bipartisan Policy Center. This does feel like something that cuts across partisan lines in really interesting ways. Can you describe just the politics of how some of these NIMBY versus YIMBY abundance debates are playing out around the country?
Well, I think people are beginning to they're playing out. There's a strong NIMBY contingent. I'm not someone who bashes people for being concerned about their community and concerned about development in their community. When the home is your most important asset for many people, they don't want all the equity that's been built up, particularly if you own your home. It's understandable that they want to protect that asset. So I don't begrudge anybody who has that concern. But the fact is we need to build more homes. Where are our kids and where are our grandkids going to be living? They need a place to live that's accessible to jobs, that's accessible to transportation, accessible to other amenities, and we just simply don't have that in too many communities.
Can we talk about two other areas of federal policy that might create some challenges on the supply side? A lot of the inputs in new housing are imported, copper, gypsum. Tariffs could raise those costs. Also, a lot of the construction workforce has dubious legal status, might be vulnerable to deportation. Are you worried about the supply side from tariffs and immigration policy right now?
Well, I was the deputy U.S. trade representative in the previous administration. So I'll do the residential construction. Yeah, we need, one of the reasons why we have underbuilt housing is because after the Great Recession in 2008, home builders got wiped out. A lot of the residential construction workforce left. And so we really have a deficit of workers who are skilled in the residential construction area. National Association of Home Builders, for example, has statistics if you want to check those out. But there is a bill, for example, that we support at the BPC called the Constructs Act, which is Marsha Blackburn and I forget who the Democrat is, but they are creating a grant program to support skilled education in community colleges and elsewhere for skilled residential construction. It's a good job. People need to get involved in that. I know Home Builder Institute is very much involved in trying to educate young people to say this is a good career option for you to be in the home building business. So we got to build, you're right, we need to ensure a strong residential construction workforce. On the tariffs, we saw during COVID, for example, when lumber went up, there were a lot of supply chain disruptions during COVID around lumber, around steel, around copper wire, all these inputs for home building, and that definitely impacted the cost of housing and available affordable supplies. So we'll see. We'll see how the tariffs work out. I mean, we do have tariffs on lumber today from Canada. We have countervailing duties to counteract subsidies that the Canadian government gives to Canadian lumber. So we do have that. But I think it's something we need to be mindful of.
So interest rates, you mentioned that the high interest rates are a real barrier to home ownership and especially first-time buyers. You heard Senator Moreno thinks the Fed needs to cut rates a lot. What do you think? What's an appropriate interest rate policy for
I'm not going to go there. I don't have a view on the appropriate interest rate policy, but I will say that interest rates 30 years are probably about 6.7% or right now. So that has had a very big impact on housing affordability. And it also has an impact on supply because it has led to a lock-in effect. So people, there are millions of households who have 3% mortgages or 4% mortgages that might consider moving and buying another house that would open up more inventory, but they're not doing so because they don't want to have a 6.5% mortgage.
Talk about the property insurance market, and one more thing on this affordability set of challenges on the list is skyrocketing insurance rates. What's driving that? Are there solutions?
I'm glad you raised that because that is really a very, very important issue, and it's relatively recent. The property insurance rates have risen 45% from 2019 to 2025. It's impacting not just Florida and California, where some insurers are just not going to or not insuring in those states or in areas in those states, but it's really impacting communities across the country. So the increase in property insurance is astronomical. There have been some very successful, we wrote a paper at the Bipartisan Policy Center. I would urge everybody to check it out about what the federal government might do to help out in this area. This is largely state insurance. Insurance is largely a state regulated area. So one thing the federal government can do is support successful state programs that encourage resilience. There have been some examples in Alabama. They have the Fortified program where you have fortified roofs. They've been hit hard by weather-related events, and they have made a significant effort to fortify their homes. You got to make sure you get a insurance reduction if you do that. But that is one thing. Also, greater transparency, data sharing is incredibly important. So this is a major issue, which I'm glad you raised, that we really need to get a handle on.
So let's talk about a particularly challenging part of the home building market and home supply market, which is starter homes. You mentioned manufactured housing. There's what are the challenges in making sure there are places where people can get that first home, young couple, young family, that is not $1 million house, is not the kind of thing that is the kind of thing that somebody starting out their career can actually afford?
Yeah, it's interesting. A starter home is defined as 1,400 square feet or less. And I saw this interesting statistic in the 1940s, 70% of new homes, newly constructed homes, were starter homes. And as the years gone by, homes got bigger, and the percentage of starter homes that have been built have been fewer and fewer, and less than probably single digits of newly constructed homes are what we would consider a starter home. So I think, obviously zoning regulations, land use regulations, minimum lot sizes can be problematic in certain communities. I think manufactured housing is an incredible potential source of new kind of starter home inventory to help first-time home buyers get into the market.
Yeah, it's striking. I'm an economics reporter. I look at productivity statistics economy-wide, and there's all this evidence that most sectors, manufacturing, has gotten way more productive.
Except home building.
Except home building.
Right. So there's stuff going on. When you're in the housing world, you've been hearing a lot about modular housing, which is a form of factory-built housing, where they build all the pieces in the factory and then bring it on site and put them together. But there's some really interesting things going on around modular housing, including building multifamily buildings through modular techniques. They exist. So that is something we need to encourage. And it's been talked about for a lot of years, but let's see I think we might be at the point where stuff is getting online that can make a difference. 3D printing is another technology that has been utilized, not widespread, but it seems to be a technology that's out there. So we definitely need to be looking at innovate. You're absolutely right to say that productivity in the home building business, home building has been quite low. It's one of the few areas that have not seen an increase in productivity.
People forget 100 years ago you could order a Craftsman house from the Sears catalog. And
I saw a Sears catalog house that was just extraordinary recently, that was built in the 40s and just dropped off, and it was just extraordinarily beautiful.
So we started broad. We've gone into some details. I'm going to back way up for our final question. Look, it seems like nobody's happy with the status quo in housing. Buyers can't afford to buy, home builders can't afford to build, existing homeowners can't afford to sell because they lose their low rate interest rate. Something has to give. What's going to give? How does this play out in the coming years?
Well, I think it's going to be a slow process, but it's not going to be just one single solution. It's going to be multiple solutions from the federal government, from the state level government, from cities. All this, there's a lot going on in the country at the local level. As I mentioned, many governors now are beginning to take a look. We're shopping a 10-point plan for governors to sign on to improve housing affordability and increase housing supply. And the federal government, I think today we saw Act 1 with the LIHTC provisions and reconciliation in Congress, and I think Act 2 is today with the Road to Housing bill in the Senate Banking Committee. So we need a lot of solutions being put forward at multiple levels.
Thank you, Dennis Shea.
Sure. Thank you.
Please give it up for Axios senior economics reporter, Courtney Brown.
All right, one last segment. And also, what a treat. You guys have the chief economic correspondent and the senior economics reporter both in one place. I get to bother Neil in person instead of over Slack. Thanks so much for sticking around for our last segment. We have a very cool guest, knows a lot about housing. Please join me in welcoming Minnesota Senator Tina Smith.
Hi, Courtney.
Hi. Thank you so much, Senator. Okay, hard-hitting question to start. When did you buy your first home?
So it's so interesting. Archie and I bought our first home in Minneapolis in 1986. I was, I think, 28 years old. And we were just talking about this. So say interest rates in 1986, the mortgage rate was around a little over 10%. We bought our house for $85,000. So in today's dollars, that would be around $240,000. The average age of first-time home buyers in 2022, I think, was 38. So think about it. If you are just getting into the business of buying a home when you're already 38 years old, you can see how completely different the market is.
So why is that? What are the factors now that prevent someone from buying a home in their mid to late 20s the way you did?
Well, it's just too expensive. Most people don't have enough money to buy a house for what it costs today. So let's unbundle that. Why is that a little bit? I mean, I would argue, and lots of folks would argue in Congress, I think both Republicans and Democrats, that the problem is that we have a severe housing shortage in this country. Somewhere between 4.5 million and 7 million homes short of the demand. And so, of course, if you're an economist, if you have a shortage, prices get driven up. And of course, it's more complicated than that. Home insurance costs more. Interest rates, of course, are going up. It costs more to build
on
homes.
average, yeah.
We were just talking about that a bit ago.
Yeah.
But fundamentally, even in Minnesota, which you would not think of as a kind of a hotbed for climate-related weather disasters, home insurance rates have gone up around 25 to 30% just in the last year. They're up over 60% over the last 5 years or so. So that has a big impact also.
I know after you leave here, maybe you're going back to work and there is going to be a markup on a housing bill, I understand.
Yes.
Senator Moreno, your colleague on the banking committee, was here earlier, a few minutes ago. He agrees with you. Right? This is a bipartisan issue. I don't think you'd be hard pressed to find someone who doesn't think that housing is unaffordable. So why has it taken this long to potentially get a housing bill across the finish line in Congress?
Yeah, it's so interesting. I have been working on these issues since I came to Congress 7 years ago. And I would say one thing has shifted, which is the understanding of the challenge of the housing crisis in this country has really grown a lot over the last 3 or 4 years. So that's part of it. There's an increased understanding of it, and there's less fighting over, do we need to subsidize rents more, or is the problem really a supply-driven problem? There's less sort of disagreement around that. Let's just be honest, Congress is not exactly the place where you go to get shit done.
I'm learning that.
So
I'm relatively new to DC, and wow, is that true? Yes.
So I'm really excited that we're doing this markup today, and it's a real tribute to Chair Scott and Ranking Member Warren for coming together and finding that common ground and getting this bill done. It will be certainly the most significant housing legislation that I've worked on since I got to Congress. I'm really excited that 2 of my bipartisan proposals, one supporting the preservation of rural affordable housing, the Rural Housing Service Reform Act, which I have with Mike Rounds from South Dakota, is a big part of the bill, and also reforms to how federal homelessness programs work. We're in strong need of reform, and that's also going to be included. So I think that this bill is going to make a significant impact on federal policies that can support the preservation of affordable housing and also building more housing and getting at that supply problem.
You mentioned Senator Rounds, who I know you've worked on legislation with before on a bipartisan basis. Mm-hmm. Is it harder to work with your colleagues across the aisle than when you entered Congress a few years ago?
Well, I always think that Washington is sort of the tale of two cities. You've got the city that you see all the time on cable news where all we do is argue with one another, and that Washington is quite real. Maybe even more real than it was 7 years ago when I came to Congress. But then there's the other Washington where I spend most of my time, where people who are trying to actually accomplish something are doing work and trying to find those bipartisan places of agreement. And so I think it is irrevocably harder to move those good bipartisan ideas through the Senate and then through the House. But there is still, most people came here because they wanted to accomplish something and not just talk about it. Right. And I think that's what gives me hope in this moment.
So we mentioned mortgage rates. The Fed sets short-term rates. That has an impact on mortgage rates. So what do you think of the Fed these days? Should the Fed cut rates tomorrow?
Well, I think the most important thing for a stable housing market and a stable economy is an independent Fed. And I think if the markets and investors and the rest of the world loses faith in the Fed setting the funds rate at where they think we need to do to maximize the Fed's dual mandates of low inflation and high employment, I think we've lost the battle. So I expect that the Fed is probably going to start to think about lowering interest rates a little later in the year. I would note that before all of this chaos and uncertainty around the president's tariffs took hold, we had anticipated those rates to happen sooner. And I think that is a lot of, as my understanding is, that's a lot of what the Fed is wrestling with. What is going to be the impact of the president's tariff strategy on the overall economy?
Yes. Senator Moreno called Fed Chair Powell a few minutes ago extraordinarily incompetent. What have your interactions with Powell been on the Hill? Do you like him?
I think it's just untenable to call him incompetent. You might disagree with him, but the man is extremely competent. And also there's a little bit of a strategy here amongst some on the other side to sort of position Jay Powell as the one and only decider when, let's be honest, there is a Fed board and the Fed board makes a decision. They don't just do what Jay says. They do what they collectively think is in the best interest of accomplishing their dual mandate. And so I think, again, you could disagree with him, but he is not incompetent. He's very, I have a lot of respect for him.
I want to ask you about a Trump administration official who I've been calling the chief antagonist of Powell, Bill Pulte, who heads up the FHFA.
Right.
What do you make of him? Have you had any interactions with him?
Well, I interacted with him when I voted against him.
Okay. All right.
But, again, I think it is misguided for administration officials like Mr. Pulte to sort of make it their job to attack the Fed chair. I just don't think that is productive, and I just disagree with it.
I imagine there are people in the room here who don't own a home, would like to own a home. I am one of those individuals.
Yeah.
Are you optimistic that this will be a goal that is more reachable for younger generations down the line?
I am optimistic, and one of the reasons why is I can see the innovation and the improvements that are happening at the local level. Let's just be clear. The supply challenge that we have in this country when it comes to housing is a choice that we're making. It's not just happening, automatically. And I would just draw your attention to what's happening in my home state of Minnesota when it comes to getting after this supply challenge and figuring out how to make housing more affordable. So it's a combination of mostly really important innovations at the local zoning level that we see in the Twin Cities, broadly speaking, and then also particularly Minneapolis, my hometown, where we have changed the zoning so that it is much more open to building many more different kinds of housing. And as a result, Minneapolis and the Twin Cities, broadly speaking, has been adding about 18,000 units a year to our housing stock from 2019 to 2022. Now, it's slowing down a little bit, which is understandable given sort of the broader economic dynamics that we're seeing. But that is a sign of what you can accomplish with progressive zoning laws and a good economic climate. And another thing that's really interesting to me about Minnesota is we are one of the states where you see the most deployment of something called community land trusts, which is a way of building permanently affordable housing in a more cooperative model. And that is also helping to, again, preserve and to expand affordable housing, housing for people working in low-wage jobs and middle-class jobs, having access to housing. And the Bipartisan Policy Center was just talking about innovations in modular construction, another place where Minnesota is leading the way and showing that you can build incredibly cool modular units, either affordable or market rate housing, and maybe save somewhere like 20% in terms of cost, because it's really hard to build in Minnesota in the dead of winter. And if you're building it inside, it's more cost effective.
So what is the role of the private sector here? You're talking about regulations at the local level. We talked about the bill that's being considered at the federal level.
Yeah.
What work does the private sector need to do?
Well, so it's so interesting. We rely heavily on the private sector, and we subsidize the private sector to build affordable housing. And I think the public sector, setting aside what we were talking about regarding kind of what regulatory frameworks we have, has underinvested in building housing. It's quite clear that if you have $1 to invest on the private sector side, you're going to invest it where you can get the greatest return, and the biggest return you're going to get is not going to be building highly affordable homes. It's going to be building more expensive homes. So I think the role of the private sector we rely on a lot. But I think we should also look at other models for how we can build housing. And that's part of what is behind the legislation I introduced with Representative Ocasio-Cortez, which is to dramatically expand the idea of cooperative housing. This is not a new idea. Cooperatives are a huge deal in Minnesota, starting back from 100 years ago. And it's the way in which places like Vienna, Austria, have been able to have so many units of highly affordable, permanently affordable places for people to live, regardless of what their income is. So I think we need to get out of our box a little bit of thinking that the only way that we can accomplish our housing supply goals is to figure out how to better subsidize the private sector. There might be other models as well.
We talked about the Fed, and one of the things that has put them in this wait-and-see mode is tariffs, as you mentioned. But they're concerned about what the inflationary impact might be and what the impact to the labor market might be. I wonder what you're hearing from businesses in your home state. How are they dealing with tariffs right now?
Yeah. Well, so, I come at this from a business background myself. I started out in the private sector before, many years ago. And what does the private sector dislike more than anything? It is chaos and uncertainty. And what I hear from business executives, whether you're a small business owner or whether you run one of the biggest companies in Minnesota, is like, how the heck do I plan? How do I make any decisions with this very, very chaotic environment where I never know exactly what's going to happen? The tariffs are on, then they're off again. There's no predictability. And, one of the things that we think might be happening as we look at the inflationary impact of tariffs is that lots of businesses front-loaded their supply chains in order to mitigate that cost in the near term, but we don't know what that's going to look like in a year or so. Meanwhile, the president is touting these, 5 trade deals that he has signed. I think it's 5 trade deals he's made, or 6 maybe, but only one of them has actually gotten anything written down. And that's the one with the UK. And there's still lots of uncertainty about what people have actually agreed to, what countries have actually agreed to. So I think the biggest thing I'm hearing is, what is going on? What can we expect? How do we plan? How do we make capital investment decisions when we have no idea what the playing field is going to look like?
Has President Trump done anything right in his handling of the economy thus far?
Well, I believe that we need to have a tariff and trade policy that puts American workers first and puts American businesses first. And I think that it's interesting, the old dividing lines between Republicans and Democrats when it comes to tariff policy are really not that meaningful anymore. I mean, I think about
topsy-turvy world.
Exactly. I mean, I think about my colleague, my colleague and dear friend Sherrod Brown, who was very, very clear that the United States trade policy had basically given away the opportunities for American workers to have a fair shot because of the way that we prioritized lowest cost goods and not thinking about American industry. And I don't think that's a national security issue for us as well as an economic issue.
Well, we are out of time. We are going to let our audience get on with their day, their workday, their morning. Thank you so much, Senator Smith, for joining us. I want to plug my newsletter one more time. I'm the co-author of Axios Macro. If you enjoyed this conversations and the conversation we've had all morning, I think you would like our newsletter. So sign up.axios.com to get it in your inbox every day. And thank you for coming to an Axios Live event. And we hope to catch you at the next one. Thanks so much.
Thanks, everyone.